What stocks am I trading in this new bullish market? What factors are driving the market onward and upward? And what's going to happen with interest rates? Is it time to buy the dip? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everyone, I'm Stephen Fox. I'm a retired psychologist who has a lot of time on his hands and trades stocks incessantly. One of my favorite areas is semiconductors. One of my favorite companies is NEX Semiconductors, and its symbol is NXPI. And this is an undervalued company. It trades at around 185. Its worth about its worth or its value is about 240. It has a very good balance sheet, as its price to earnings is only 15, which is low for a technology company. So you have an undervalued company with strong growth. NEX Semiconductors, symbol NXPI, has a wonderful growth rate of 30%. So you're getting an undervalued company with a low price to earnings with a strong growth rate of their earnings. So this is a solid company. I think this is one for the long term. Even if you can play it as a swing trade, it's more than a day trade, that's for sure. And I think semiconductors, in some sense, might be the new oil to go along with the phrase that's out there. I also have another semiconductor company. I'm investing in about 5 or 6 of them at a time nowadays. A semiconductor manufacturer that I like even more is ON Semiconductor. Its symbol is ON, ON. And it's an undervalued company also. It trades in the low 70s. Its value is like at 88. And it has a low price to earnings ratio for a technology company of about 17. And it has an outstanding growth rate. And I'm finding nowadays, especially if the market's in a bullish mood, the growth rate seems to make the big difference. And they have an earnings growth rate of 39%. So this is an outstanding company to invest in for me. I've been putting a lot of money, and I mean a lot of money, into Google. I like to trade under the symbol GOOGL, GOOGL, which is Alphabet, is the formal name, but everybody calls it Google, of course. And the main things with Google are, of course, its search engine and YouTube and the advertising they do. But they also are going into parts of the health field, and they are working on autonomous driving with their Waymo, and I think they're having some success to the point that I wonder if that isn't ultimately what autonomous driving ends up being. That is something that's mainly done in big cities where things can be mapped out and you can see everything. You know what the terrain is, and you have to equip the car with the devices, which are expensive. But if you're going to replace a driver, it should be expensive. And we know that technology will improve and it probably will get cheaper. I think it's a solid approach. They're sure to have some success with it, and they may ultimately have the success, because I think autonomous driving has to be one of the most complicated things you can possibly ask a computer or a machine to do, and to work together and get that done is incredible. Google trades in the 120s, and its value is probably 135. And it has a good price to earnings for a major technology company. This is a mega cap. Okay, it's $730 billion, about the same size as Tesla, as it turns out. But they have that reasonable price to earnings of 20, and they have a solid earnings growth rate of 25%. I think this is the long term. I actually view it as a conservative thing to do, and that's why I put major money in it. It's the kind of thing I want to put the money in and forget about it and leave it alone, if possible, unless we have some kind of black swan event, and you never know when those are going to occur. But this is a stock that I trade in and out of all the time. I was out of it during the bearish phase of this market, but I think that phase is toning down, and I think we're moving towards the bullish side. I think there's going to be fits and starts, but I think we're going to get there. So those are my nice conservative stocks, but I was naughty in a way. I kind of went a little bit too bullish, maybe. I bought some ARK KK. That's a Cathie Wood fund. ARK KK, which is ARKK, is an innovation fund that has a time horizon for the investment of like 5 years, and they invest in innovative technologies that are going to change our future. And I've invested in this in the past, in its heyday in 2020. It was 2020 and 2021. It was like 150 or something. I think it went above that even. And I remember, I tend to remember the price I get out, okay. But I bought back in at 51. I put some money in it. I can't resist it. It's sort of the counter thing to do. And if this is a new bull market or a recontinuation of the old bull market, it should do well. It'll be a surprise, but I think this bullishness is coming upon everyone as a surprise, and I think it's going to continue to surprise, and so I'm willing to go with that and put some money into ARKK. I guess I became a little bit delusional. I got thinking if the stocks I was trading and the way things were moving, it felt like I was back in 2020 and 2021. And so and that's when I was investing in ARKK. So I guess maybe I did it out of nostalgia, but I don't think I'm going to lose much if I do lose. And I think I stand to make more money than I risk losing. So the risk reward is definitely there. So we'll do this for a while. I think it's probably a limited swing trade, but we'll see how things go, and I'll go into those reasons more later in this video. So later in the day, on a Tuesday, I was watching these day traders, and they were going crazy over a meme stock. The meme stock was Bed Bath & Beyond. Okay, its symbol is BBBY, 3 B's then a Y. Of course, for Bed Bath & Beyond. And they were going crazy. They had started out trading at S16, and we were literally watching it jump up. I think it finally hit 27, okay? And I'm watching this and I'm saying, nah, I don't want to trade meme stocks. I don't really believe in meme stocks. But I like the store. I buy my pillows and all my bed stuff there, and I just like the store, and so I was tempted, and I was kind of getting into the spirit of this, but I watched it go up to 27, and then I checked in on it every so often, And finally, it got down to 18. Okay. And this is a stock that's going to jump all around. Okay. And so you just got to play the swings. And so I thought it was worth a swing. So I swung at it and I got it at around 18. So I was pretty happy about that. In the after hours that same day, I think it hit 22. So we will see what it will do tomorrow. But I don't know if I can. Maybe I'm going to keep it. You know, what's been keeping AMC going is people just liked AMC. Decided they didn't want to let it go out of business. And I think that was a lot of the motivation there. And also there was heavy short selling. There's heavy short selling of Bed Bath and Beyond also. And so if this market keeps going up, the shorts are going to get squeezed. Squoze, I guess, is a word. It's formally is a word to say. The past tense of squeeze is squoze. So they could get squeezed or squoze, and I think it's a reasonable thing to do for the short term, a short term swing trade. But it's kind of fun in any case, and sometimes I like to have fun with the market when that's possible. We won't go into the statistics on this one. Statistics don't mean much. You don't invest in this for the long term unless you're wild. And maybe I got the wild side to me there. But I think it's a swing trade. It's a meme stock. It's kind of fun. And, you know, it's been a meme stock for a long time, for maybe a year or two. But I don't think it's really gotten up to bat like the others have, like AMC and GME. But I think it's turn now as it's showing. So I didn't do the AMC, I didn't do the GME, the GameStop stocks, which are meme stocks also. And I just thought I would do this for fun and maybe make some money in the process. And what's going to happen with interest rates? You know, the 2-year rate right now is over 3. It's like 3.25, and the 10-year rate on a bond is about 2.8. And that is weird because the 10-year rate should not be lower than the 2-year rate. You should be rewarded more for buying a bond with a longer maturity, like 10 years. And, you know, they keep talking about when will Powell, the head of the Federal Reserve, when is he going to figure that he's hit neutral? I think what he thinks is neutral is the 10-year rate, because the 10-year rate is saying, hey, in the long run, inflation is going to be less than 3%. Okay. And right now he's got the Fed rate at 2.75. It's almost 3%. Okay. And he's saying he thinks they're close to being neutral now. And that's because it's close to matching the 10-year rate. The next rate increase will be restrictive because it will go above the 10-year rate or close to it. And I expect them to raise it another 0.5 point with decreasing increases after that. And I'll tell you the reason why. They raised it 0.75 in July to fight inflation, but also they wanted to get the dirty work done before the election. And I believe it's on September 21st that they announced the rate increase. I think it'll be 0.5 to show that they're still tough on inflation, but they're taking it. They're trying to take it easier if the inflation data is good. The inflation data for September, that comes out in September, will come out on September 13th, and that's the August inflation. And so on September 13th, they're going to get how bad the CPI is, the Consumer Price Index. And then they're going to base how much they're going to increase it on September 21st, according to the inflation data. But I think Powell is a dove at heart. I don't think he wants to increase it. And the big reason for not increasing it above 0.5 is politics. We have the midterm elections. I fully expect him to raise it 0.5 in September. And then in October, I think he's going to raise it 0.25 if the inflation data is reasonable. And that's because there's signs that inflation is going down. The oil price is down below 90 for the first time in a long time. Commodities have all, 2/3 of them have gone down. And so I think he has an excuse to be able to lighten up a little bit. I think there'll be some increases after that, but I think they'll be dependent upon the inflation data. And I think they'll be more like 1/4 to 1/2 point. And that's only if inflation gets worse. Because once he goes above the 3%, he's getting restrictive. Because he's predicting that inflation is going to be worse than what the bond market is saying. And the bond market is nearly always right. And so I think he's learned his lesson on that from the past. He's been burned in the past sometimes by raising rates too much, and then things start to slip. And things are tentative enough that I don't think he wants to chance that. So if you think the market is bullish now, just wait. If inflation goes down and he only raises it by 1/2 point in September and then 1/4 point in October, and inflation stays reasonable, the market will go absolutely nuts. And I think there's support to doing this, and it's politically good to do this at least for the next couple of months. Again, there might be some increases in 2023, but I think they'll be few and far between. A major background factor in all of this, and a factor that nobody talks about, at least the networks I watch, hardly ever mentions it, is that Ukraine seems to be doing better with the war, that the long-range missiles have really made a difference in their being able to defend their country. And I think if that goes well and that war ends somehow, some way, that the market will explode upwards like you've seldom seen it explode upwards. A major thing that I've noticed is how much the variability of the market, the volatility of the market has decreased. The VIX, the VIX, and usually if there's a lot of volatility, there's more volatility in a bear market. And so the VIX is usually 25 or over. Right now, the VIX is under 20, okay? There are signs we're returning to a bull market. And there's been solid progress been made, and we could well be in for a kick upwards like we haven't experienced for a long time. Be sure to like and subscribe if you haven't done that already. Hit the notification bell if you want to be notified of future videos. Thanks for watching, and good luck to us all.